Scott, what I also find interesting is that we've had this recent discussion about rotation in stocks and a broadening out of the rally and small caps coming up and some of the other areas catching up. And then on a day when tech is down, it's taken everything down with it. So much for the ballast of the other areas of the market and the broadening. How are you thinking about that, and how's that going to play out during the rest of the earnings season?
Well, we've been advocating the small cap trade of late, and so I'll take the relative performance advantage that we're getting today as part of the way this plays out. But we've got several forces at work in the markets right now. You've got the AI underlying growth influence on the broader market, number one. Number two, we've been navigating, where the election debate is taking us in terms of what that might mean for policy in 2025 and beyond. And number three, don't forget, since the end of June, the market in different ways, shapes, and forms has begun to discount something akin to a soft landing. So we got three different forces at work. The small cap play, along with the value play, along with our preferred positioning in areas such as financials via banks, the consumer sector, even real estate, are all predicated on getting to a Fed pivot in the September timeframe and leaving behind this 2-year period of hawkish Fed narrative and transitioning to something that should ultimately benefit those more traditionally early cycle areas of the market, which, oh, by the way, have lagged and have a better valuation setup.
And Scott, when you say you like small caps there, that's because just earnings growth and valuation look attractive, Scott?
So here's the twist. I think we all know the relative valuation's off the charts attractive for small cap. That's a head fake. I don't pay too much attention to that because it's a function of how great the mega cap growth cohort and large cap has done. The absolute valuations are also attractive versus history. And what we're focused on is the earnings growth setup. Small cap earnings have been down to flat for the past 2 years. Right now, consensus expectations are for small cap via the Russell 2000 or even the S&P 600 indices to move materially higher next year in the mid-teens. Now, we certainly have to allow that out-year expectations can always be a little bit aggressive. But as we go into next year, function of your base and function of what should still be a fairly stable economic setup going into 2025, you're going to get a narrowing of the earnings growth disparity between large and small. That should come back and benefit small cap courtesy of a lower valuation starting point.